Hello, welcome in the next video. This video will be about when should you wait for the confirmation entry and when can you use the risk entry. Okay, let's begin. You should always check if price is coming from an unmitigated zone or not. As I said in the previous video, you want to trade the controlling side of the market. If you are waiting for a demand trade, but price is coming from an unmitigated supply zone, supply is in control, and you can't execute a demand trade without a confirmation because there could be a high chance for you to get stopped out. Okay, let's see an example for when can you use risk entry and when should you wait for confirmation entry. As you can see, price is moving in a downtrend here, creating series of lower lows and lower highs. Supply was in control because supply was formed continuously, but price stepped into a demand zone. And after the demand test, price broke through the less supply zone and created a change of character to the upside. And as I always say, if price breaks through a zone, an opposite side zone will be automatically created. So price broke through a supply zone, so a demand zone was formed. After the tap of this freshly formed demand zone, price created a break of structure again to the upside with inefficient movement. Okay, after this, if you want to execute a demand trade here and follow the trend, you have three possible scenarios. If price taps into a supply zone, comes up here, reverses, then supply will be in control again, and you can't execute a demand trade without any confirmation because you always want to trade the controlling side of the market. And if supply is in control, you can't open a demand trade because there will be a high chance for you to get stepped out. So in this case, you should always wait for a confirmation entry. We will talk about confirmation entries in the next unit. Okay, the second scenario, if price reverses before this supply zone and does not tap into any supply zone, then you can open a risk entry here without any confirmation because demand is still in control and you can easily target the next unmitigated supply zone after the tap of this demand zone. So once more, if price reverses before this supply zone, you can easily open a risk entry here and target the next unmitigated supply zone because price did not tap into any supply zone, so demand is still in control. So the third scenario is if price breaks through this supply zone and does not tap into any supply zone, so demand will stay in control, then you can execute a demand trade again on this zone because demand is fully in control because it broke through the less supply zone. So these are the three possible scenarios. So once again, first one, price taps into this supply zone, reverses, then you can't open a risk entry here because you should wait for a confirmation entry because supply is in control. The second one, if price reverses before the supply tap, then you can easily open a risk entry here because demand is in control and price did not tap into any supply zone. And the third one, if price breaks through this supply zone, demand will be fully in control and you can easily open a risk entry on the demand zone. Okay, let's see a live example for this. Okay, so let's see a live example for the risk and confirmation entries. So as you can see, price was moving in an uptrend, creating a series of higher highs and higher lows, higher highs, higher lows. And in an uptrend, price will form demand zones. So we have this really valuable demand zone right here because it created a huge inefficient push to the upside. This inefficient push created a break of structure and swept some liquidity from this region and created liquidity here just above the zone. After this, price did a pullback here. And after the pullback, it created a break of structure to the upside again from this demand zone. But actually, I refined this zone on the 5-minute chart because we are currently on the 15-minute chart. But we'll talk about refinements in the next video. Okay, so we have this demand zone that created a last break of structure to the upside. And this demand zone pushed the price up to the supply zone. Because we have this supply zone up here, because price was moving in a downtrend, and now price is in the pullback phase in the uptrend. So it's on the way up to tap the supply zone. So after supply tap, supply took over control from demand. So you can't open a risk entry on this zone or this zone. You will have to wait for a confirmation entry, some change of character, and after you can open a demand trade also on this zone too. So let's see what happens. Price reacted on this supply zone, as you can see, strong rejection. So supply is in control. If price breaks through this zone, supply will be fully in control because it broke through the last demand zone. So after a zone breaks, an opposite side zone will be created. So if this demand breaks, supply zone will be created. Let's see what happens. Very strong momentum. As you can see, price broke through this demand zone. So a supply zone has been created. And this supply zone, This supply zone caused the order flow that led to a break of structure and change of character to the downside, and it broke through the last zone. So we can't open a risk entry here because we have to wait for a confirmation entry. Let's see what happens. Supply is fully in control. So supply is still in control. Let's see what happens. Okay, price tapped into the supply zone, as you can see, and had a reaction and some rejection. So this means demand is in control now. And we have this supply zone up here that caused the tap of this zone with inefficient push, as you can see, and break of structure to the downside. And actually it trapped some liquidity from this region too. So this is a really valuable supply zone. If price steps into this supply zone and rejects on it, supply will be in control again. But if price breaks through this zone, demand will be in control again, and the demand zone will be formed because it broke through an opposite side zone. Okay, let's see what happens. As you can see, price stepped into this zone and had a reaction. So supply is in control now. If price breaks through this zone, demand will be in control and the demand zone will be formed. Okay, price broke through the supply zone. So demand zone has been formed here, as you can see. We have this demand zone right here. Let's just extend the zone and play price forward. So actually you can open a long trade on this zone because this was the confirmation entry. Price broke to the last supply zone. So demand has been formed. So a confirmation entry has been happened, and we can target the next unmitigated supply zone, as I said. So this will be our target point. Let's see what happens. Price tagged us into the trade, had a reaction. So demand is in control, as you can see. Price reacting strongly on this demand zone. So we are in the trade, creating series of higher highs and higher lows, respecting demand zones over and over and over again. I will just extend these zones. Let's see what happens. TP hit. So as you can see, this is how can we use the risk and confirmation entries, knowing the fact who's in control for our advantage. And this is a really, really strong weapon. So you have to master it and master everything about the control side, because you always want to trade the countering side of the market. Okay, meet you in the next video. Welcome. In this video, we will talk about the refinements. What do we call a refinement? When we have a higher time frame supply or demand zone, we want to check if we can make that zone smaller on the lower time frames. We will use two types of refinements: the 4-hour to the 50-minute and the 50-minute to the 5-minute. The 50-minute chart or the 50-minute time frame is moving in a downtrend, creating series of lower lows and lower highs. This means we will have supply zones. Let's say the upside candle of this movement created the inefficient move to the downside and the break of structure. So we will have a right and valid supply zone. If we switch to the 5-minute chart, inside of this 50-minute supply zone, we will find a much smaller zone, because the 5-minute candle before the inefficient push will be significantly smaller, and we can use this zone as our 5-minute refinement. So if we correlate the time frames, we will have this bigger 50-minute zone, and inside of that bigger 50-minute zone, we will have a much smaller 5-minute zone. So this is what we call refinements. Okay, we are on the live chart. I usually do two types of refinements. The first one is the 4-hour zone refinement on the 15-minute, and the second one is the 15-minute refinement on the 5-minute. But if I refine the 4-hour zone on the 15-minute, I just keep it that way, and I won't refine it again on the 5-minute. So I only refine those 15-minute zones on the 5-minute, which were not refined from a 4-hour zone. Okay, as you can see, currently we are on the 50-minute chart, and I will show the 50-minute to the 5-minute refinement first. Price was moving in an uptrend here, creating series of higher highs and higher lows. After this, price changed character to the downside with these two inefficient candles. So we have the first POI on the 50-minute, this one, because this is the less recent candle before the inefficient push and the change of character. So I mark this zone out. If I switch to the 5-minute chart, you will see that inside of this 50-minute POI, this big box, we will have a much smaller box, this one, because the inefficient push on the 5-minute started from this candle. So we almost halved the size of this zone. With these refinements, you can have much smaller zones and you'll have a more precise area of the possible turning points or target points. So if you were in long trades, for example, from here, you will target this area, this 5-minute refinement, and not the 15-minute, and you will have a higher risk-reward ratio. And if you are waiting for a turning point, you will aim for this 5-minute refinement and not on the 15-minute, because you know that inside of the 15-minute POI, you will have a smaller 5-minute POI, and you will wait for a reverse point on this 5-minute POI. This is the power of the refinements. Let's see this on the 4-hour to the 15-minute chart refinement. Before we continue with the 4-hour to the 15-minute refinement, I want to show you what happens if you get two unmitigated 5-minute zones inside of the 15-minute zone. So if you see two unmitigated 5-minute zones inside of the 15-minute zone, you just want to keep the unrefined 15-minute zone. And if one of the zones are mitigated, you can use the other 5-minute zone as the refinement. So as you can see, price is moving in an uptrend here, creating series of higher highs and higher lows. We will have this 15-minute zone here because it created a Wyckoff structure to the upside with an inefficient movement. So we can safely mark out this 15-minute zone. If we want to refine this 15-minute zone on the 5-minute, you will see two different 5-minute zones inside of this 15-minute. The first one is down here. The second one is up here. The first one has been already mitigated by price. So this means you can safely use the upper one as the 5-minute refinement. But if price didn't mitigate the first one, so it has been left unmitigated, you can't use double zones. You will have to use the full 15-minute zone as your demand zone, so you can't refine it. Okay, let's see the 4-hour to the 15-minute chart refinement on the live charts. You can also apply the double zone rule on this one. So let's see an example. As you can see, price created this demand zone right here. It created an inefficient push to the upside, break of structure here, change of character here, liquidity CFI here. So this is a really valuable zone. Okay, let's see the refinement of this zone on the 15-minute chart. Let's find that zone. As you can see, this is that 4-hour zone. And inside of this 4-hour zone, you will have two different demand zones. The first one is up here. As you can see, this created inefficient push to the upside. Here, break of structure and liquidity sweep. So we have this first 15-minute POI inside of the 4-hour. We have a second one down here, as you can see. This one, because it also created break of structure to the upside with an inefficient move and liquidity sweep. But this zone has been already mitigated by this movement. So this means you can safely use the upper zone, because as I said, if you get two zones and one of the two zones is mitigated, you can safely use the other one. So in this case, the other one is this one. Okay, you will want to see some rejection or reaction on this zone inside of the 4-hour POI. Let's just extend this zone and search for a reaction. As you can see, price perfectly tapped this zone, perfectly tapped it with this wick, and after the tap of this zone, it rejected and reversed the price to the upside. So this is the power of the refinements, because as you can see, price has already tapped this zone, the 4-hour one, but it didn't mitigate the full zone and didn't mitigate the 15-minute zone. So it had to come down to mitigate the 15-minute zone inside of the 4-hour. This is the true power of the refinements.